Bloomberg Quint.
Hi, you're watching Bloomberg Quint, and I have with me Dev Sanyal. He's the CEO of Alternative Energy at BP and also the head of Asia and Europe. Thank you very much, Dev, for speaking with us here in Davos on Bloomberg Quint. Let me start by asking you what you make of the rapid recovery we've seen in crude prices, albeit in the backdrop of what seems to be a year of strong global growth.
Well, I think you just said it. I think the global economy has been growing. Some would say, compared to last year's sentiment in Davos, in a lot more of a robust way than we were forecasting generally in Davos. I think our forecast this year continues to be very robust. We are seeing, we think, fundamentals pointing to a 3.2 to 3.4% growth in global GDP. So the world economy is prospering, and that's, of course, translating into the need for energy as economies prosper moving forward.
Do you believe it's $70 a barrel? This is a sustainable price for oil, or this is where shale kicks in a big way and we might in fact slip lower? Oil price is always difficult to forecast, but is this a viable, sustainable price band?
It's hard to say for the obvious reasons, because this is, of course, a global traded commodity. But I think the fundamentals tell us a few things. Okay. Number one, the inventory overhang that we saw last year and the year before, that clearly is being degraded. And we are actually seeing sort of the market going into more of a balance as we look at sort of the second half of this year. We are also seeing, of course, robust growth. Last year we saw growth of around 1.6 million barrels a day in terms of demand. This year we are forecasting that there will be growth in demand of a similar amount. I mean, what the precise number will be will, I think, be determined over time. But also what we are seeing is that there is actually supply fundamentals playing themselves out. So what we are seeing is that OPEC has been very disciplined, and effectively we have seen the OPEC Accord of November of 2016 sort of play itself out in the market. So I think, as always, there's a combination of the supply and demand factors. But I would say on the supply side, the overhang that we saw and the narrative that we saw in the preceding years has abated. And of course, there are some particular areas like Venezuela, like Libya, like Nigeria that need to be looked at very carefully as we look at 2018. And frankly, there's also, of course, the outputs in the United States. Last year, we saw 0.7 million barrels a day growth in the U.S. output. This year, we continue to forecast a pretty strong growth. So I think the markets will sort of adjust accordingly. So the exact price is difficult to forecast, but it feels a bit elevated at this point in time. And I think sort of in the second half, we'll have to probably see some of the fundamentals, see where it kind of rests. But I think the fundamentals are pointing more to a sort of softening, but not necessarily a fall, but a softening as we look for the rest of the year from where we are at the current moment.
So you're not buying into the $100 a barrel forecasts that some might be making?
Well, I never forecast $100 when it happens, so I'm not going to try and sort of make a forecast this time around, but it's hard to see fundamentals pointing to that particular price range.
Fair enough. Given where we are with crude oil prices, given where we are with gas prices, does this enhance your investment plans in India with your partner Reliance Industries? Are you looking at maybe putting in more investments in fields, capacities, things like that?
We are making a lot of good progress in India. And I think when you look at the overall fundamentals of India, they're very, very strong. India needs a lot of energy. Our forecast, by the way, for the next 20 years, India needs 130% more energy than it actually consumes today. And by the way, we're going to see a tremendous rise in gas, actually around sort of 130% as well. Renewables around 699%, oil at around 105%. So India just needs a lot more energy to meet its economic needs moving forward. Gas is going to be an important part of that narrative. We are actually progressing our investments in the Bay of Bengal, and what we expect to see essentially is a strong progress in terms of monetizing that opportunity set. And what we are targeting is essentially a narrative where we can get to 1 billion cubic feet a day of gas production in India over the course of the next 4 to 5 years.
Are you disappointed with how that's turned out? I think when you initially invested in hope that KGD6 would be... look, the narrative on KGD6 has gone back and forth a lot in the last decade in India. So do you feel that you finally have been able to figure out how you will be able to monetize it best over the next few years?
I think we are very excited about the current set of investments that we have in terms of the plan moving forward for the next 5 years. Our industry is a very long-term play. We take a very long-term perspective on any investment, and the fact of the matter is fundamentals are very important because we have such a long investment horizon. The fundamentals of India are very strong, and I think what we're doing is investing into those fundamentals, which are I think,
those fields haven't returned to you any of what you had hoped they would in the initial period.
I think we're going to the next phase, and the new investments that we've announced essentially will be about essentially monetizing the opportunity set from there. And the total investment dollars runs into many billions. We are looking at over the next 5 years, and we're also looking at, of course, the creation of jobs that will support, if you will, the development of the resource base.
You had to write down your investment on KGT6 in some fashion?
We've had sort of, with the price of oil moving, there are also obviously accounting impacts. So when the price of oil halved, that actually had an impact on...
And it's also production, because that just hasn't picked up the way you all had planned.
And that's why we've got this sort of plan moving forward to ramp up our investments, to basically monetize the resource base from that area. And by the way, 100% of the gas will go into India's energy needs. And we have a vision that over the next 5 years, 10% of India's gas needs comes from our production in that area.
Okay. So I suppose you don't regret investing in it, given that it hasn't really delivered, what you had hoped for, at least in the first 5 years.
We are very, very optimistic about the fundamentals. And in every country we invest in, quite frankly, Manika, we have, as you'd expect, the peaks and troughs. But the overall fundamentals, frankly, are pointing to India by the middle of the next decade actually overtaking China in terms of absolute demand growth for energy. So India is going to be, I think, whichever way you look at it, very important for all forms of energy. And gas, of course, meets a very important narrative for India of clean energy.
Okay. Why, and since you're the CEO of alternative energy, may I ask you this question? India has put out some fairly ambitious targets for renewable energy, both solar and wind, but more so the focus now is on solar. How is it that BP is not yet participating in any big grand way in that, in that plan of moving towards a substantive contribution to the grid by renewable energy?
Well, we are investing in the alternative energy space, and I would say BP was one of the early investors in this space across the world. Today we have 4 businesses in alternative energy. It's in wind energy, it's in biopower, it's in biofuels, and more recently in solar energy. We announced on the 19th of December an acquisition of a 43% shareholding in Europe's leading solar company, Lightsource. And by the way, Lightsource will be renamed Lightsource BP. The transaction is expected to close shortly, and indeed Lightsource BP are actually in the process of building out in Maharashtra a very important development in the provision of solar energy. So, solar energy is going to be a very important part of India's narrative. The Prime Minister laid out in Davos his vision, 175 gigawatts, and this is a very ambitious plan. Already 60 gigawatts have been commissioned, more to do. But I think what we are seeing is that solar energy is competing. We are seeing wind energy is competing. We're seeing biofuels competing. And effectively what we want to do is make sure that we are able to invest into a business model where we bring our capabilities to create real value for the communities we serve and the governments and societies we partner with. So India very much is going to be a big part of the renewables narrative. We estimate over the next 20 years a 699% growth in renewables to meet, if you will, that big number of 130% energy demand growth in India. And we will, of course, look at opportunities. And we announced last year an MOU with Reliance to sort of look at the low-carbon offers in India, and we are working towards that. But as I said, more recently with the Lightsource BP deal, we will actually have now exposure to the solar energy business in its first form in Maharashtra.
Any direct investments that you're planning in the alternative energy-based space in India?
I think we're sort of looking at a whole bunch of options, as you'd expect, around the world. Again, I mean, I think the key for the alternative energy business is making sure you're investing into a business model where you can actually drive value. Just looking at cost of supply curves is not the way forward, because the cost of supply curves are going down because technology is actually creating real opportunity in this space. So I think the opportunity moving forward is, can we bring value and can we actually bring together a set of integrated offers, maybe combining renewables with gas as well, which I think brings a more integrated dimension. And that's one thing that we want to actually look at, and we are studying in India and indeed in other markets around the world.
Okay, so it isn't for any particular or specific tariff or structural or project reason that you haven't yet invested in India. It's just on your list and you will get to it at some point in time.
I think what we're saying is that we want to prioritize. I mean, there are finite resources in terms of human and financial capital. And right now we are very focused in India in terms of actually taking forward our gas investments. But over time, we'd hope to participate even more in India's energy narrative and hopefully provide to India what it needs as it actually continues to be one of the dominant forces in the world economy.
Okay, fair enough. I have one last question, Dev, and I don't think this is as much to do with BP as it has to do with your understanding of the renewable space. And that is that, we've seen this peculiar situation of tariffs decline very, very dramatically across both solar and now wind power as well in India. Some part of it is because technology is making the cost of inputs, sort of come down. But not anybody's sure on really what this means for viability of projects. If you've looked at that situation, your response to that. And the second thing is this wave of import duty protection that's going on around, solar inputs, solar power inputs. Do you see that sort of being derailing in some fashion the supply chains across the world of solar power panels and things like that?
I think with every business, there are sort of changes that occur because of regulatory actions or indeed actions by governments. But I think the fundamentals of solar and wind and biofuels are pointing to essentially a business model that's competitive against alternatives. Because I don't think it's any good saying we're going to provide an alternative energy which is going to be a lot more expensive. Because we actually need to provide something which is safe, which is secure, which is sustainable, but also very importantly, affordable. And I think what we are seeing now, when you look at the solar space as an example, we have seen essentially the supply costs go down by 80% over the course of the last 5 years. We have seen sort of capacity, in the last year only, essentially sort of go up by around sort of 30%. And we're seeing that trajectory continue. And that's actually not driven by effectively having a more higher cost energy source. Is actually driven by creating affordability, because technology and operating capability and efficiency is driving down the cost. So yes, I mean, tariffs do have an impact in the short term, but fundamentally, where's the trend? And the trend is your friend here. It is actually heading south, and I think that is actually a good thing, because ultimately any form of energy has to be affordable and competitive, and that is very important. And I think we can, due to technology and other factors, create effectively some scale businesses around the world. But again, one is to be thoughtful about the pace, and one is to also be thoughtful about making sure the capabilities are mirroring ambition.
Yeah. Okay, fair enough. That's a great answer. Thank you so much for your time here in Davos. Have a good trip, the rest of it.
Good seeing you, Malika.
Thank you.